everybody. My name is Mitzi Keating. I am the founder and co-practice leader of Citrin Cooperman's Cannabis Advisory Services practice. And today on this little recording, I'm going to talk to you a little bit about cannabis fraud, red flags in fraud. We know that cannabis is illegal still at the federal level, and various states have legalized it for certain purposes, whether it's medicinal, adult use, or have decriminalized cannabis in some way, shape, or form, most states. What we have to kind of understand as well is that this industry is emerging from an illicit market. And when it comes from an illicit market, we have a number of different things where there are bad players in the cannabis industry. And we have to understand what to look out for if we want to participate in the cannabis industry, if you're an operator in the cannabis industry, if you're an investor in the cannabis industry. What is it that might indicate some element where the business that you're dealing with or the situation that you might be dealing with might not be exactly what it seems to be on its surface? So I'm also a certified fraud examiner as well as a certified public accountant. And what I find in the cannabis industry is that both licenses are very applicable to really understanding what is going on within the books and records of a cannabis company. So the first thing you have to kind of understand if you're going to, let's talk from the investor's perspective. If you're going to invest into a cannabis company, what's the first thing that you need to understand with regard to this company itself? Well, the first thing you need to understand is the corporate structure. What is it that you're actually investing into? Cannabis companies have a number of different kind of common corporate structures where you may be investing into a parent company, that's a holding company, which owns a number of different subsidiaries, which may be all wholly owned by the holding company. They might not be wholly owned by the holding company, but they end up in a situation where those holding companies own companies that own licenses to produce, cultivate, sell at the retail level, deliver cannabis in some way, shape, or form as established by the state regulatory authority. So once you understand the corporate structure, you can understand kind of what you might expect with regard to cash flows or what you might expect for how the company does. Oftentimes people aren't aware of what the structure looks like, which means that they don't necessarily know exactly what it is that they're investing in. There could be related party transactions, there could be management agreements that move money from one entity within the structure to another entity within the structure. Not necessarily a problem if they're all wholly owned by the same holding company, but oftentimes you may have joint ventures included in your corporate structures. And if you're not aware of where money could kind of bleed out of that system, you might not necessarily be aware of exactly what it is that you're investing into. One of the big things with the corporate structure is that oftentimes they're kind of designed, or they used to be more designed, to see if we could avoid Code Section 280E. Now, Code Section 280E, as you're aware of, is the code section that really disallows any deductions or credits from income in determining a cannabis company's taxable income. So oftentimes we saw originally some structures that included management companies or, kind of entities or maybe payroll entities whereby it was thought that if we kind of moved those people or expenses out of the cannabis company structure, well, maybe we'd be able to deduct those expenses somewhere else. Well, with a few tax court cases that have come through in the cannabis industry, we found that not to be the case. That pretty much anytime you try to avoid 280E, the IRS has another magic wand that they're able to take and kind of wave over the entire structure, call it one economic enterprise, and determine that all of the entities in your structure are subject to Code Section 280E. That's one thing that you need to be aware of before investing into cannabis companies is certainly understand the corporate structure and understand the taxation structure associated with these entities. One of the other things, again, with the corporate structure is what is the type of entity that you're investing into? Is it a partnership? Is it a C Corp? Where is the tax liability going to lie? Is it going to be with you, the investor, or is it going to sit in the corporate entity? And that's something that you need to understand because from a cash flow perspective, if you may be looking at phantom income that's coming to you as an investor on your personal return for which you never received $1, because there's a big difference between taxable income and the actual net income earned by that cannabis company due to Code Section 280E, you may end up reporting phantom income on your personal tax return. You may expect the company to issue you a tax distribution in accordance with the operating agreement of that partnership. And what if the company doesn't actually, or the partnership doesn't actually have enough money to issue those tax distributions, where are they getting the cash flow from that? Is it coming from debt that they're raising? Is it coming from additional outside investors? There's a lot that goes into kind of determining whether or not the corporate structure or the partnership entity and the real structure of the cannabis operation is going to lead towards some sort of bleeding of money one way or another. The other issue that you have to always worry about with regard to cannabis companies is that they have a strict regulatory environment in the state in which they operate. So we have to know and understand the regulatory environment in that particular state. There's suitability issues with regards to investors. If someone wants to invest into this cannabis company, might they end up potentially putting the license in jeopardy? If there's going to be a change in ownership, are they really looking to make sure that people aren't violating the license cap limitations in that particular state? So there's a lot to really understand to determine whether or not a cannabis company that you choose to invest into is going to end up in a situation where they might be viable going down the road. So again, there's a lot that I've kind of given you in a very short period of time, but that is what we do when we evaluate companies for due diligence purposes. We help investors kind of walk through that set of circumstances just to ask the right questions when they're looking at cannabis companies. And for the operators themselves, we help them avoid those pitfalls. So that being said, for more cannabis talks like this on the latest legislation, news updates, business activities, industry updates, just check out our Cannabis Content Hub on the Citron Cooperman website and sign up for our newsletter via the link above. Thanks and have a great day.